Welcome to today's analysis. This is the first video of the weekly analysis. I'll be releasing video each and every weekend. It's Julius. So I'll be doing analysis for two pairs. That is the US oil or the crude oil, the US oil, or depending on your broker, it might be having a different name. I will also be doing for gold. Gold is gold across all the platforms. So let's start with the first one. So this is the US oil chart. Remember what I talked about when I was talking about the order blocks in the previous video? I was talking of an order block must meet some criteria, which include that the order block must break several structures, must have a fair value gap, and also price must not bounce from it several times. It is only limited to 2 times. So we'll have to identify the order blocks. This is a 4-hour chart. I will do from a 4-hour chart. That is basically the chart that I will be using most of the times, unless I change. So I use the smart money concepts, that is order block, fair value gaps, and any other concept that you can think about. And I also use the simplest market structure based on the trading channels. So this is the US oil. I want us to identify the first block that we are supposed to pay attention to, because either way, we have the so we have this block right here. So the last candle there. So the high at the bottom or the high at the low of that candle. We also have another candle right here, which was the result of the down the move that we have. So let's see. As the criteria been met, so we have this candle, which is followed by a fair value gap, and also the order flow is the same. We have this candle followed by this gap right here, but it was immediately filled. That's okay. Now, after identifying, I need us to identify, is there a potential channel that the market is following? Because we have that limitation when we are using order blocks. Price might violate the order blocks, but on very occasions that it might violate a specific channel. So let's see, do we have a channel? I just draw one right here. When you're using these channels, always ensure that the lines are parallel to each other. If you cannot draw parallel lines, then you can opt to use a parallel. We have an option of a parallel channel. So just draw passing there, and then maybe the high side passing through these sides. I think I can include, I can make it bigger. I think now it's somehow visible. Maybe it can be there seen. So this is the chart now. Based on liquidity, we know if you are trading just smart money concepts alone, we know that there's liquidity here, liquidity, or maybe just stop that. We have liquidity here, liquidity here, liquidity here, we have liquidity here. So the chances are these equal highs might be taken out. So if the equal highs will be taken out, we have the price coming to this block before dropping. That is now what I'm expecting when it comes to that pair. An additional information concerning that with the US oil, we are expecting to sell from 83. Allow me just to mark this. We can sell from that is a channel. We can also mark this other block right here, because these are the two blocks that we are paying attention to. So what does this information tell you? That you can only trade in direction with the trend. Try not to trade against the trend. That is because the entire move has been a buy move. Now, when you're trying to check for a selling opportunity, you're going against the dominant force. Always, you're supposed to ensure that you're trading in that direction. So we expect the market to pull back to a point before continuing in that specific direction. So in regard to that, this is my expectation that the price will come all the way to this point. There's a confluence between this channel, the high of the channel, and this block. There's that confluence. So I will see a possible reaction from this point to this point, which is a possible scenario. But either way, I'm also expecting that price might drop down to this order block right here, because we add this as a first move, retracement, that retracement, for then 50 move. After the 50 move, there's always a retracement. So I'm expecting this channel to be taken out. So if we are taking a sell from here, this can be a target, or this order block right here can be a target where you are expecting to exit the market. And there's a possibility here because of this kind of liquidity. There's a liquidity we call an FTP. I think I started an episode about this. I'll be recording these videos day after the other about the smart money concepts and liquidity, to be specific. So we have this point here. We call it an FTC. If the price breaks up a specific point, either a resistance point or a support point, and closes below the point, that is an FTP. So we expect price to continue lower from this point. But just to be safer, or maybe for the purpose of taking money, we pay attention to this block. So we just target there. There's another block right here that we cannot ignore. That is a order block. So there's that confluence between this order block and this the bottom of the channel. So we pay attention to that. So we expect to sell, just that, selling or not. We expect to sell from 82, 81, 82, this zone. And then we target here. We take money. That is approximately 800 pips. You take money from that point, and then you wait for the next move, which will be now a potential buy from 68. Or maybe the market confirms to buy from here, you can take a risk. But always pay attention to the risk management plan that you have. These are that specific percentage of money or a percentage of the account that you are not supposed to lose. If it is 5%, 3%, 1%, depending on the account size, don't allow the market to take more than that specific percentage. So assuming that is it, now I want us to continue to a different pair. I think that is everything about this pair. About the order block that we are paying attention to sell from. There's no FTC to the resistance of the channel, but there's an FTP when we are checking at the support of the channel. Let's go to gold. So we said we are looking to sell 82, 81, 82. We target 70, 74, 75. Then we pay attention to the next opportunity from that point. That is the whole of next week. Let's go to a different pair. This time, the gold. This is gold. The same criteria has to be met that we need to find a channel that the market is operating within, and also find the order blocks that we expect price to react from. When I talk of liquidity, like in this case, we had the market dropping from here after the NFP, and then the market did not close this point. So there's this gap to be filled. There's what we call partial mitigation that happened. And then we have another block here with CP high. And then the price has also not fully mitigated the point. So we have a possibility of the market coming up here to mitigate this, pull back to a point, and then move all the way up now to mitigate this entire. That is what we are supposed to pay attention to before anything else. Now that we know the market has liquidity to go for, because that is how I define liquidity, that liquidity always attracts the price. Or at any case, if you're selling, if you want to buy a mobile phone, you cannot buy it from your house unless you're using maybe an online kind of transaction. But if you have to go physically to purchase a mobile phone, you have to move from your house to a shopping center or a store in town where you're going to buy the mobile phone. That is, you are going for the liquidity. The same case applies when it comes to trading. That price always is attracted where the liquidity is. In most cases, the liquidity is the transacting point or the marketplace. So let me just find the channel first. We need to identify a channel within this book that the price is following. This is a 4-hour chart still. I say the channel or the must be parallel to each other. That is something we need to remember each and every time. So assuming we take this point, this top, and maybe just join with this one. And now we extend the channel, this point, perfectly, that point. We can now maybe make it longer. That is a channel that we need to pay attention to, that we know that the price has been bouncing within the channel, that we had the first touch here, the second touch here, the third touch here, and then the fourth touch right here, and then the fifth one. So there's a probability of the market extending this point. Now, what we do next from there, we need to identify an order block that is in confluence with that point, because there's no FTC or an FTP to the resistance level. The chances are it must sell from that point. The chances are it must sell from the resistance of the channel. So we mark the order blocks. So we have this candle right here. Let me just increase the size of my candles. When we are talking about liquidity, there is what we call equal highs liquidity, equal loss liquidity, and all sorts of. I want to believe this candle is feasible. So that is the block I'm paying attention to. This candle right here. There's that candle. And also maybe this candle. So this is for now an intraday trader or a trader who is now trading the movements within the other movements. We have that order block. To the downside, we also need to have another block that we are basing our argument on. So there's this candle right here. This one right here. So we will mark this as our bullish order block. I think I posted a video yesterday about order blocks. So if you're new to the channel, make sure you subscribe, keep liking, and if you have a comment about the next lesson that you want me to cover, you can just put it on the comment section. Also, ensure you join our trading channel. The link will be on the description. So this is a point, and this is the candle that has been holding the entire. Remember before this must have been Fed news. I think we can make this thicker. Also extend this that point. So there's that confluence between the trend line and the order block, and you see the market obeying that point. And so even with the CPI, because this was CPI, price never broke this point. So we are expecting now price to continue pumping higher now to a point, but maybe this is my expectation, or this is what we are supposed to do if we are doing this together. Maybe the market comes to this point and pulls back again to this block around 83 or 93, around this point. The price can pull back to this block, which is 93, 91, or can pull back to the starting point, which is 80, 81, 83. And then now, after a confirmation, we will buy from here all the way to 2050, but we will look to sell if the market goes to 2056. If there's a probability of the market, maybe giving an FTC or an FTP up there. So that is the expectation when it comes to that instrument. That is a very movement that we can expect when it comes to gold. So that is everything about that. Ensure you have subscribed to the channel. Ensure you have also liked the previous videos you can watch. I will come up with several videos. This is the start of the channel. We expect to grow, maybe in 1 year time or whatever. We expect to have a better audience. Let this reach out to our traders out there. So until that very next time, see you.